Welcome to an episode of Strategic Conversations. We host insightful discussions with top business leaders and top business minds. Thank you for joining us today. We are hosting Mr. Tim Balombin, the Managing Director at TD Securities. Mr. Balombin will be a speaker at the Houston Strategy Forum's upcoming fifth semi-annual Carbon Hydrogen Symposium. We're excited to host it. I'm Ravi Kathuria, the president of the Houston Strategy Forum and author of the management and leadership book, How Cohesive is Your Company, and author of Happy Soul, Hungry Mind. Strategic Conversations is hosted by the Houston Strategy Forum. If you value these conversations, please hit like and subscribe to the Houston Strategy Forum's YouTube channel. Today's episode is sponsored by Cohegic, a management consulting and executive coaching firm. Thank you for joining us, and I'm looking forward to a great discussion with Mr. Tim Balombin. Tim, thank you for taking the time. I'm looking forward to hosting you on May 15th. It's going to be a great discussion. I enjoyed the perspectives that you have already shared with me previously in our prep call here. So it's going to be a great discussion.
Well, thank you very much. I appreciate the opportunity, and I look forward to having a discussion coming up here on May 15th.
That's right, in less than a month. So Tim, tell us, you are the managing director at TD Securities. What is the scope of what TD Securities does? What is its focus, and what is your role in the organization?
Sure. So TD Securities is the investment banking arm of TD Bank. So TD Bank is the Toronto Dominion Bank based in Canada, and we are the investment banking arm. And within that, I sit in the Houston office, and I'm responsible for covering our large cap oil and gas companies. But also, I spend quite a bit of my time in the energy transition space, and in particular in that, really, it's carbon capture and direct air capture.
Wonderful, wonderful. So you have a pulse of the market then. You have a pulse of the market.
Spent a lot of time in the market, absolutely.
So let's talk about that. Our theme on May 15th is ground realities. 3 years ago, ESG was the intense focus. We had large funds refusing to invest in companies that were not making progress on ESG. We had about more than $100 trillion under fund managers who were saying if companies are not going to focus on ESG, that seems to have, that got the CEO's attention, as it really should have. Got every board was talking about it. 3 years have gone by. We see a little tempering and normalization. What do you see? At least that's what I see. What do you see in the marketplace? What are ground realities as we sit here in April 2020?
Yeah, Ravi, it's a true statement. It's pretty interesting when you look back about 2-3 years ago. Having an ESG component to your investment portfolio was absolutely critical. I mean, I remember we were at a point where we were talking with some of the large, truly global infrastructure funds who, normally are in a more risk-off type of investment strategy where you have contracted revenue, line of sight onto cash flows. Check sizes are larger just because these are multi hundreds of billion-dollar funds. And they were at a point where they were willing to come down, write very small ticket sizes, checks in the $50 million, come way down the risk curve or way down the risk into higher risk investments, because they just needed to have that opportunity in their portfolio. And there's a little bit of a fear of missing out, which is if they didn't make that investment and that investment grew in size, that they would never have the chance to come and invest in it later when it did mature. Because the fact of the matter was, this is all nascent, right? And so there weren't any big mature companies that they could put their money into. And so they were willing to come down market. Now, we've seen that change completely on its head, right? You've seen a little bit of a pullback on investment on ESG. There seems to be a retreat on ESG pressures. You couple that with this increase in rates, which just means the cost of capital has gone up. And you've seen some struggles in the tech sector, which is really kind of a leader of where clean tech and clean energy is going. And you've really seen a real drawdown on the amount of capital that's being deployed, particularly on the larger size. So ESG it's not to say that it's no longer in vogue or important, but you certainly have seen there's less of a need to have and more of a true economic decision as to we're going to put our capital where we think we can make our returns.
So, Tim, you have focused on M&A, you watch the market. Uh, what excites you, or what area, both in the oil and gas sector and at the Houston Strategy Forum, we don't use the phrase energy transition. We call it energy evolution because we find that I find energy transition is a narrower term. So we talk about energy evolution because the world faces both an energy crisis and a climate crisis. Both need addressing. So when you look at the energy evolution, this whole aspect, where do you see now that things are normalizing and this flight to quality, right? Projects initially we were past a little bit of the frenzy as I call it. What do you see as staying power? What has matter, right? What is real?
Yeah, it's really a tough question to answer as to what is real, just because again, it's everything is such an early stage. We have to take a step back and say, what do we feel good about, right? I think we generally feel pretty good about a lot of our government policies that are supporting this stuff. So whether it's the IRA, the bill, it doesn't matter if it's a Republican or a Democrat. It seems that there's enough in those bills, fundamental packages that placate both political parties, which gives a certain stability and a tailwind into the sector. So then the question becomes, when you look in those sectors, how dependent are you on those? And look, there's a very much a stickiness to those sorts of government policies that we feel good about. So then the question becomes, I think, in my opinion, since I focus more on the carbon capture space, generally speaking, is we really need a voluntary carbon offset market, right? And that's going to be the revenue line beyond your 45Q or 45V if you're hydrogen, that are going to be really critical for driving the industry forward, right? So either we get more policy support, or we eventually have a developed and fully functioning voluntary carbon market, which enables the revenue line to grow, and then you can start to see the profitability of these businesses, right? And so between now and that point, which is, we suspect will come in the next several years, it's really going to be a little bit of a guessing game as to who's going to be best positioned to win. But I think where you see companies that are partnering up with larger strategics are generally speaking going to have a better chance of surviving.
I love that point. I mean, you raised two important points there. One is this carbon market, because there is this offset, right? The trading carbon and the price for carbon. So companies can, the companies that are able to sequester carbon or reduce carbon are able to get paid for it. But then also, hopefully, it leads to a true carbon market where carbon becomes a valuable commodity, right? And so we talk about at the forum, we don't call it carbon utilization, we call it carbon productization. Is that there are product segments that we don't even know about today that could use carbon as a feed, right? Carbon is a very valuable. Carbon dioxide is problematic, but carbon itself is a very valuable commodity. And so you talked about in our prep call earlier, you talked about construction material, right? Carbon in construction material. There are so many carbon in food. We have done carbon conclaves at the Houston Strategy Forum, and one of the people there, he pointed out, he said the biggest application for carbon is food, right? And so you use, and you look at it, of course, carbohydrates, and so you say, yes, there are very significant applications for carbon. And now society and the world, if it learns how to respect carbon and how to really leverage carbon, it can solve so many of its issues, right? As population grows, we know we are going to need more food. We know we are going to need more dwelling. Well, construction material, food, carbon is the base there. So we have huge opportunities. So I appreciate you pointing that out. The other thing that I wanted to pick up on is that how would you advise? I was talking to one of the CEOs who are going to be speaking on May 15. This is a CEO focused on decarbonization and has bet his company on its future. How would you advise? I mean, we are in an election year. We're 5 months, 6 months away from an election. How do you advise companies to be ready for any changes that might come past the election, regardless of which side wins, right? Because things are
Right.
constantly evolving, and how Congress looks at things can change. So how would you advise? How do we develop a strategy that works in any case?
Yeah, no, it's a great question, and really, it's the way that I look at that is from the lens of raising capital, right? So again, if we start with the notion that a lot of the companies that are in this broader space are private companies that are startups that are growing in size. Some are still very new, Series A rounds, some are much larger, raising hundreds of millions of dollars at a time. The question really becomes, how are you prepared for it? And the interesting thing is, if we take a step back 2 years ago, the view was it was a far friendlier and far easier market to raise money in. So it was, you can go raise a Series A, a Series C, a Series D today, because in 2 years, when you need more money, the market will be there, you can raise again. And really, that all got turned on its head, right? With the raising of the Fed rates and where things are today, a risk off marketplace investing environment. You're really in a position today where you don't really want to go to the market unless you have to right now, right? It's a far more difficult market. You've seen a dramatic increase in down rounds and insider rounds to keep companies afloat. So the advice that we're giving companies is simply, at this point, you need to be prepared. You need to get everything together. You need to get all the materials that you need to launch a process, a capital raise process, ready to go, because you don't know how quickly the market's going to turn and it will become a risk on market. And the reason why that's important is because this will fundamentally be a transactional market, whether it's on the M&A side eventually when it matures, but certainly now on a capital raise market, which is what we're in this phase. You still have, Ravi, billions of dollars of capital flowing into these funds that need to invest the money that have largely been on the sidelines for a year or a year plus at this point. And so once that market turns, you want to be ready to be one of the first ones out of the gate to take advantage of that. And that's what we're advising companies is to be lean as long as you can to get through it, but also do all your work to be ready to go once the market turns, and it will turn.
And it return. And do you think the first quarter of next year is when all of this begins to bubble up, because there is now a little bit of more certainty as to what the path forward may be? Is that where the timing is? Is that how CEOs should look at?
That's really how we're looking at it. I mean, I think that there's a possibility here that when you get to the very end of this year, that you could see a loosening of that market. And it's really going to be a function of your company and where you sit relative to your peer group. But I could see at the very end of this year, the last 2 to 3 months of the year, that you could see a softening of that. But I think that the market will probably start to turn over when we get into Q1 of next year. And I think that it's going to be one of those things, Ravi, quite potentially, where when the gates open, it's really going to be a fantastic opportunity for a lot of companies to get their next round of funding.
How wonderful. If you have been listening to this video, please come on May 15th to engage with Mr. Balombin and get to understand what exactly is advising companies, how he's thinking about it, how is he analyzing the markets, and we have a very powerful lineup of speakers and adding more. So this is going to be one fantastic discussion. Tim, I appreciate you. Thank you for taking the time today, and I can't wait.
Thank you.
For May 15th. This is going to be a good discussion. I can feel it.
It'd be a great time. I'm looking forward to it too.
Very good. Thank you, sir. Thank you so much.
Thank you.